Hey, what's going on everybody? Dustin here, welcome back to the channel. And in this video, we're gonna take a look at Acorns Investing and see if this easy to use Robo Advisor is something you should be considering using. Now, Robo Advisor usage is increasing, mostly with the younger generations, and this could be due to their lower fees compared to a traditional financial advisor, or maybe it's the use of computer algorithms to help them save time and help them save money with taxes while investing their money into quality funds. And really, anyone who's not interested in even learning the basics of investing, like using a 3-fund portfolio, could find using a robo-advisor very useful, although these options are not for everybody. But Acorns is a popular option and it gets a lot of press, so let's take a look at it. Now, when it comes to Acorn Investing, they do have a few different investment options to choose from. They offer their Acorns Investment Account, which is their taxable brokerage account. They offer IRAs, which fall under their Acorns later, which these include traditional IRAs, Roth IRAs, and even SEP IRAs. Then they also offer investment accounts for your children, which falls under Acorn Early. And Acorn Early offers UTMA or UGMA accounts, and I'll cover these accounts in more detail in another video, but these accounts essentially let you invest money for your kids and you'll transfer ownership to them when they become adults. And to create your Acorn account, it's actually very simple. You just need to enter in your email address, then you're gonna get to choose to link your bank account right then and there, or you can skip it and add it later if you want. Then you need to enter in your personal information and contact information. And once you do that, Acorns will offer to send a code to your phone to authenticate you. Then you need to make some security questions. Then after you do that, you do need to answer a few questions about your income and how you would like to invest your money. For example, when you select what your investing goals, you have a few options to help guide Acorns to select the best portfolio for you. Then you'll select how much you plan to invest and then even how long before you plan to touch the money in this account. Then Acorns will tell you the portfolio they think that'll work best for you, and you can always change that option if you wanted to. And that's it. It's pretty simple to make yourself an account. And with Acorn, there are no account minimums to open your account, but it does take $5 to start investing, which is pretty much nothing to get started. You can also set up recurring investments for as little as $5 in investment, so you don't even need to think about investing your money. But one thing I really like about Acorns is their Round Up feature. And when you link your cards, like your credit cards or debit cards, Acorns will round up your transaction to the nearest dollar and put that spare change into your Acorn investing account. You can even add multiplier boost to these roundups if you wanted to, so you can save and invest even more of your money. And these multipliers can be 2x, 3x, or even 10x. So for example, if you have the multiplier set to 3x and the amount rounded up from your transaction was 37 cents, that would put $1.11 into your investing account. And if by chance your transaction lands perfectly on the dollar, you can choose to invest nothing or even up to $1 for that transaction, so you're investing something there. And this can just make it so much easier for people to invest without even trying. And just rounding up the spare change can really make a difference over the course of a year. I mean, just think about all the transactions you make and how that can impact your investing just by rounding up the spare change to the next dollar. Now, if you're enjoying this video, then give this video a like. It helps others find the channel and it's a free way to support the channel as well. Now, Acorns does offer 5 different portfolios you can choose from: conservative, moderate, moderately aggressive, and aggressive. And the makeup of these portfolios are all different, although they do have some similarities. Now, the conservative portfolio is made up of 100% bond ETFs, which is very conservative in its makeup. Then the moderately conservative portfolio, it consists of 40% stocks made up of large, medium, and international stock ETFs and 60% bonds. Then the moderate portfolio is a 60-40 split between stock and bond ETFs, with stocks being made up of large, medium, and small, and international company stocks. Then we get to the moderately aggressive portfolio, which turns to an 80-20 split of stock and bonds. And this portfolio is almost 50% large company stocks, but it also has some medium and small companies as well as international stocks in the portfolio as well. Then lastly, we get to the aggressive portfolio, and this one is made up of 100% stocks, which is different from other robo-advisors, and I actually kind of like it, because a lot of other robo-advisors have some sort of bonds in their portfolios, even in their aggressive portfolios. And we see the portfolio breakdown of stocks consists of 55% in large companies and 30% in international, the rest being made up between medium and small companies. But while we know how these portfolios are made up, what are the funds that Acorn uses for their investing accounts? Now, just like other robo-advisors, Acorn uses low-cost ETFs to manage your portfolio, which honestly are a great option. And for most people, ETFs or index funds is really all you need, because these funds are made up of so many different stocks to give you great diversity, and it also reduces your risk instead of selecting just one individual stock, which I think is a really great thing. And there are 23 different stock and bond ETFs that Acorns does use. And for the most part, Acorn uses iShare funds, which I think is perfectly fine. But they do have a couple of Vanguard funds like VOO and VB, plus a few other institutional investment options like JP Morgan and even Goldman Sachs. But overall, the number of funds Acorn uses is pretty limited. And some of the funds, while the expense ratios are very low, aren't necessarily the lowest cost option out there for the respective ETF class. But the impact here should be minimal, but I think it's still something you should keep in mind. But since Acorn doesn't utilize tax loss harvesting, they don't necessarily need a large number of ETFs for their portfolio. So while it may be limited in numbers, they do hit all the criteria they do need to hit. Then the reality is any time you're using a robo-advisor, there's some sort of fees or some sort of trade-off. Now, Acorns is not free to use for their investing, and the type of investing options you'll have access to will depend on the fee that you're willing to pay. And the Acorn fees are not percentage based, they are a flat fee, which has pros and cons, which I'll touch on in just a second. But their fee structure is different from that of many other robo-advisors. They offer their light version, which is just $1 per month, and this will only get you access to their taxable brokerage account and nothing else. You can still use their options like Round Up and their Found Money partners with their light version though. For $3 a month, you're going to get access to their personal account, which includes Acorns Invest, Acorns Later, and even Acorns Spend. And Acorns Spend is their banking account. Then the family account is $5 per month, and this is going to get you access to things like Acorns Invest, Acorns Later, a spend account, and you'll even have access to Acorns Early, which is the investment accounts for kids. So there are a few different levels depending on the type of accounts that you want or the accounts that you need. Now, Acorns has adjusted these fees over the last few years, so it is possible to continue to see these fees increase in the future as well. Now, since these are all flat fees per month, the percentage of your fees is going to depend on how much money you have in your Acorns account. And while $1, $3, or $5 per month doesn't sound like a lot, this does translate to $12, $36, and $60 per year depending on the account that you have. And options like Wealthfront or Betterment have a 0.25% fee. So if you had a light account, you would need to have $4,800 or more in your account for the fee to be lower than that of Betterment or Wealthfront. And for a personal account, it changes to $14,400 before the fee drops below 0.25%. And for the family account, that happens at $24,000 when that fee drops below that 0.25%. And once you get above those numbers in your investing accounts, then the fees based on the percentages becomes lower for Acorns over those other options. Now, if you're just starting out and you don't have a lot of money to invest, but you want to use a robo-advisor, then do keep in mind options like Fidelity Go have no fee options for up to $9,999 in your account. But the fees aren't terrible once you start accumulating higher balances in your Acorn account. Now, Acorns does offer automatic rebalancing, which means you won't need to make any adjustments to your portfolio to keep that portfolio balanced. They handle that for you just like a robo-advisor should. But what's notably missing from Acorns investments is tax loss harvesting, which is a service some other robo-advisors do offer. And I think this is something that would be very beneficial for Acorns to offer their customers, because the tax benefits can be helpful to offset the fees people will pay, and it could make this service worth it for people. Then Acorn does offer ways to earn more money for your investment accounts right on their website and even in their app, which is actually pretty good, and it can help boost your portfolio balances without adding any extra of your own money. Now, one of the ways to earn extra money is with what they call Found Money, and these are kickbacks or rewards when you make a purchase at a retailer using their link to make that purchase. they get money for you using that link and they pass on some of those rewards to you. And there are a few different options and ways to earn money here. There are flat fee rewards such as getting $35 when you sign up for the Blue Apron, or getting a percentage back for your purchase like getting 3% back at Buffalo Wild Wings. And you can even stack these offers with your credit card rewards to help you earn more rewards in the process as well. Now, be sure to check other shopping portals as the payouts could be better there, but having this option all on one website, that's not a shabby thing. Then Acorns does offer a referral program, so people who sign up for Acorns using your referral link, they'll receive something. It's usually not a lot of money, it's somewhere between like $5 and $10, but at least it's something for them signing up for Acorns. But for the person referring people, Acorn typically runs promotions where you can earn a lot of money just for referring people. For example, right now, Acorns is offering $200 when you refer just 2 people, and that's a decent amount of money. And these promotions change all the time, and the referral amounts can vary as well. And those referrals can not only help boost your investment account totals, but they can also help offset your cost of those fees. But don't just push Acorn for the referrals, be sure to mention the fees and what they offer, or even better, you can just share this video with them. That Acorns does not have any human financial advisor, so access to a person for interaction or questions could be limited. Now, Acorn makes it extremely easy for people to get started investing their money, and it literally just takes a few minutes of your time to set up an account. Now, I do wish they asked more questions to better gauge your risk tolerance, rather than just asking what type of account you would like to invest in. Because people might say they want an aggressive account until they see their portfolio drop a lot from being in, well, an aggressive portfolio. Now, the fees for Acorns do look to be low, but if you're just getting started and have a lower amount of money in your account to invest with, then the fees based on a percentage are going to be higher than other options out there. And one thing I could not find in my searches is what has been the average return for Acorn investment users, because while they use low-cost ETFs, that does not mean their returns are outperforming other Robo Advisors or even just matching the S&P 500. But their hypothetical investment projections are based on a 6% annualized return. And if that's their typical return for their customers, then that's really not great compared to other options. Then the lack of tax loss harvesting, I think, is a miss here. I really think having a Robo Advisor handle that function is a great benefit. So while Acorn has some nice features like roundups and found money, which makes it very easy to earn extra money for your investment account, I do find Acorns to be a peg or two below options like Betterment or Wealthfront. I do think Acorns could be useful for someone having a difficult time investing or saving and who will use the roundup feature, because this really takes the work off of you, and each time you make a transaction, you're investing your money, and that can really add up over time. Or if you're someone who can refer a lot of people to earn easy money, then Acorns could be helpful for you as well. But while Acorn isn't a terrible option, and they have a pretty good app and user interface, I just don't believe Acorns to be a top-level robo-advisor. That being said, let me know if you're someone who uses Acorns Investment, and what do you think of it? Now, if you're someone who might want more control in building a simple portfolio, then be sure to check out this video right here where I explain how to build a great portfolio using only 3 funds. And if you know someone who might find this video useful or helpful, feel free to share it with them, and I'll see you in the next one. Take care.